Hello trading friends and welcome back to Forex Focus, brought to you by IG. A bunch of major economic data points coming out of the US here to conclude the month of March. We're going to get to those expectations and when they're coming out in just a second, but also want to take a look at gold and US dollar markets moving all over the place ahead of these huge data points that come right before what might be some huge Federal Reserve interest rate action in the coming months. Well, hopefully, if this data goes the way that Fed Chair Powell wants it to. But we'll take a look at US GDP growth rates that are supposed to come out very soon, as well as the PCE inflation rate, which is Fed Chair Powell's favored inflation measure in the US. Both of those data points set to come out in the next week of trading. And in the most recent couple of days of trading, seeing a lot of volatility enter the gold and US dollar market. Let's take a look at gold prices first, as they moved all the way up to all-time highs in terms of gold futures for more than 20, 30 years of trading there for gold. Got all the way up to $2,200 and then backed off, 20, 30, 40, 50 bucks, depending on what time frame you're looking at. If you're looking at, a 15-minute chart or what have you. And you can see that gold has kind of danced around this 2150 to 2200 range, and now back on the bullish foot. Gold prices are to start this week, heading back closer to 2200. And there's a lot going on. There's the Russian-Ukrainian war is been escalating here recently, and that is probably a good piece of this potential flight to quality in gold. But also you've had the Fed here in the U.S. Start to get closer on rate cuts that could be coming and lower interest rates, potentially good for this non-interest-bearing gold market. What these pieces might not be good for is this U.S. dollar market, as it's reversed its recent strength here, looking at pound versus the dollar. And you can see that pound got hit pretty hard in recent trade. Dollar went back to recent highs in the last week or so. And now we've had the pound bounce back. We've had the euro, Australian dollar, a number of major currencies bounce back against this U.S. dollar, as U.S. dollar has now seen some weakness here in tandem with that gold strength that we've seen. And we'll see if these trends continue after the U.S. data that's set to come out, because it'll be very important in a couple of different data points. We'll start with the GDP first, as this GDP in the U.S. has actually been a reason for U.S. dollar strength recently. And you can see here, this graphic encapsulates major economies across the globe, and the darkest blue regions, some of the strongest GDP growth rates compared to all of these global regions. And you can see the United States, some of the darkest and the most recent growth rate from the U.S. we'll get to in a second, but really close to that 5%, the strongest part of this, the legend that you have down there, the metric for GDP growth rates. But before we get to the actual projections for this GDP growth rate measure that's set to come out, it's worth taking a second to compare GDP growth rates from the US to the UK and the Euro area and Australia and Canada, especially if you are trading Forex, because the theoretical would go that stronger GDP leads to stronger currency, essentially stronger economy, stronger currency. And this is one of the reasons you've seen another recent bout of U.S. dollar strength over the course of the last few months, is you're having economic data like GDP and employment data and inflation data move lower in some regions like the UK and throughout the Euro area in places like Australia and Canada. And in the US, it's also been moving lower, but on a relative basis has been holding in stronger than those other regions, and thus you've seen some US dollar strength. But we'll see what this GDP reading, and we'll give you here the expectations and the most recent readings that we've got, and a couple of things to digest here. One, over the course of the last year plus, you've seen pretty consistent positive GDP growth in the U.S. Two, the most recent quarter-over-quarter reading, you saw almost a 5% U.S. GDP growth rate, which, we were just looking at that last model of major economies across the globe, and 5% is really, it's hard to do for such a large economy that's already got such a large GDP. And a third thing to look at here is on a monthly basis, you get insights into what this quarterly GDP number will be. And the initial expectations months ago were 2% for this quarter's GDP growth rate. And now the expectation has been bumped up to 3.2%. And this is another occurrence where you might get a higher than expected reading relative to that 3.2%, which could create some U.S. dollar strength and potentially could move that gold market lower, but a little bit less of a correlation there. But that being said, you have to keep in mind the alternative. This U.S. outperformance could end at some point, and you could see a GDP that's lower than expectations. But there's a setup for the U.S. GDP numbers that are coming out. But we also have inflation data here in the U.S. coming out, and this is equally as important as that GDP growth rates, but for a little bit of a different reason. You may have heard that the Fed is looking at interest rate cuts off of their 5.5% high interest rate levels that we got to amid high inflation over the course of the last couple of years. Well, the PCE price index inflation rate is Fed Chair Powell's favored inflation measure here in the U.S. And you could see it's been moving lower. This is what you would hope if you were Fed Chair Powell. The only thing that's been relatively problematic is that it's been a little sticky around this 3 to 4% range in recent months. And the expectation here for this month is to stay at 2.8%, which was last month's reading. So not move lower like they would like it. The central bank aims for 2% even inflation. And so if inflation stays high at 2.8% or even moves higher than that, that could be cause for interest rates not getting cut sooner rather than later, and some more U.S. dollar strength and some gold weakness. But vice versa, again, on the flip side of this, if U.S. inflation comes in lower than that 2.8%, then maybe you see some U.S. dollar weakness and you see gold strength here near the highs. Either way, seeing great back and forth, some volatility entering this gold and U.S. dollar market. Right now kind of moving with a relative inverse correlation, and likely to get some more movement out of this U.S. GDP number and PCE inflation rate that are set to come here at the end of March.